You are a big proponent of the three-legged stool, crypto, real estate, and equities. My wealth consists of being a whole coiner and owning a paid-off house. Would you go hard into equities, keep stacking Bitcoin, and buy a second home for rental? Interesting one. So I do believe it's good to have my diversification is that three-legged stool that I've been talking about since I began this channel, because that's everything I did. You've all heard the story a million times, but let's pull out a little example. First of all, I want to say something which is not financial advice, but I never pay off mortgages. And let me run through a simple scenario as to why. 1, it's tax deductible for most people. 2, if you can borrow at 5%, and all of my mortgages are under 3% or at 3% or very close to 3%, and I have a number of mortgages, why don't you want to borrow at, and I chose a 5% rate because it's kind of the average for the year so far in 2022. But why not borrow at 5% when the stuff you're borrowing, which is fiat, is debasing at 14% on average, and you have extra cash to arbitrage invest as you go forward? Again, if you can get a higher return on your money, it's a game changer. And I'll give you another example of how that is the case in a minute. But here, mortgage scenarios, if you have, say, a $500,000 home and it's fully mortgaged, you got zero mortgage, that is an opportunity cost. Your cash is locked up and it's not earning market returns. It's all in your real estate. And real estate will go up, but not as fast as the markets. Next scenario, you have a 15-year mortgage, $500,000. Your mortgage payment is $39.54 a month. Your interest over the mortgage of 15 years is $711,000. And again, you pay it off faster. But the difference is you have a lot less disposable income month to month as you go forward. If you have a 30-year mortgage, your monthly payment is $26.84 instead of nearly $4,000. So you got $1,300 to play with and live a better standard of living or invest. Your interest over the mortgage is $966 versus $711, but the extra interest is $255, but you pay it off a lot less over that 30-year period. And let me explain why in this simple little chart. So if you look at this is kind of going out to 2030, just 9 years, not 15 years or 30 years. But just to illustrate the example, the purchasing power of $1 million will be worth approximately $470,000, given 8% increase in money supply and the acceleration of that money supply of 15% per year. That is not going to 15%, but that 8% becomes 8 times 1.15, and then that number times 1.15 the next year, and so on and so forth. And that brings us down to a $470K and $1 million. If you have a house, okay, $1 million house, that will be worth 1.885 million at the end of those 8 or 9 years. But the real value in purchasing power is only 886, but it beats the hell out of the 470K, which is where your $1 million in cash goes to. But think of borrowing that $1 million. All you have to do is pay back 470 in real terms. That is the point that I'm trying to get. And another thing as well, when we talk about timing of the market, I'll get back to the answer to your question. So asset purchase timing is very important. And I've been talking about this. I say, Bitcoin leads the market. It falls first. It responds first. It rises first. So crypto fell first. It happened already. Equities second. After last week, we saw many getting smashed. Many are falling into the kill zone. Super, super cheap. Generational buying opportunity that's happening now. And the third is real estate will fall over the next 3 to 6 months because there's a big lag between. So depending on what you want to buy, it's very important to time it correctly. Therefore, you wait. If you want to buy something now, you buy equities now. And I believe you are short equities. Final example, getting back to the fact that you have your house fully paid off. I know it's expensive to borrow money, but I also know that Tesla's going to do a lot better than 7%, which is the mortgage rate right now. But if you pulled out $100,000 against your house 2.5 years ago, and you dropped that into Tesla 2.5 years ago, you would now have $1.3 million. And you're only financing 100K at 3%. That's $3,000 a year on 100K to generate 1.3 million. For me, think about that and let that sit in. And I do believe you need more equities. You already have your Bitcoin. It's good. You got your house paid off. Maybe pull a little bit out, stick it into the market. Again, I will always have a mortgage. It's free money.